Stocks continue their climb in a broad-based rally. Telecom, energy and realty are the big gainers, even as IT drags. Midcaps outperform.
Vodafone Idea inks a deal with Nokia, Ericsson and Samsung for network gear worth $3.6 billion, even as the Supreme Court rejected a review of the AGR dues. Experts remain circumspect about its outlook.
HDFC bank arm HDB Financial is set to float a 2,500 crore IPO via an offer for sale to meet RBI guidelines, while Brookfield-backed Leela Palaces has lined up a 5,000 crore IPO years after the earlier listed hotel Leela ran into trouble.
Tata Steel commissions its blast furnace at Kalinganagar for expanding its capacity at the site from 3 million to 8 million tons per annum at an outlay of about 27,000 crores. This comes even as the industry battles a rise in imports from China.
Prime Minister Narendra Modi tells CEOs of the big tech companies in the US that his aim is to make India a hub for chip manufacturing and assures them of IP protection. This is even as India and US agreed to set up a multi-chip fabrication unit in Jewar, Uttar Pradesh.
Good afternoon. You're watching us here on Halftime Report. I'm Manglam Malu. With me, Ekta Batra. It's a good day of trade for the markets. I call it good because Friday was a record-setting rally for our markets, and thereafter, Monday, there's a follow-on gain, almost 100 points on the Nifty, 150 points on the Sensex, and the Nifty bank doing well as well. Yes, there has been slight moderation from the highs, but that's pretty par for the course. The Midcap index doing extremely well, with 0.6% in terms of gains, and nearly 2 stocks expanding for every 1 stock which is declining in trade today. So all said and done, it's a good Monday for the bulls. Hi, Ekta.
Hi, Manglam. Yes, absolutely. Well, for the Nifty, we are up around 80 odd points at this point in time. We were sitting at those record highs, so no complaints coming in. We have the mid-cap index, which is up around 0.6%, and the advanced decline ratio, which is holding steady on the advancing side. But nonetheless, we do have a lot of ground to cover. Let's start with a lot of stocks which are in focus. VIdea Idea surged in trade after concluding a $3.6 billion supply deal for network upgradation with vendors. Makshi is here with the details on this.
Well, Vodafone Idea is definitely surging in trade today. It's a big respite that is coming in for the company, and in fact that is on account of the mega deal that they concluded with Nokia, Ericsson and Samsung. This is worth almost $3.6 billion or nearly 30,000 crores. This deal is for supply of network equipment over the next 3 years, and in fact marks the first step towards the rollout of the company's ambitious capex plan. Keep in mind that they have a capex plan, or it's a 3-year capex plan for almost $6.6 billion US, which is worth almost 55,000 crores. This is a big positive because the street had been waiting for this capex plan. It's some announcement to come through from the company, especially after the equity raise, and it has finally come through, giving a much needed respite to Vodafone Idea after the development that we saw on the AGR front. But apart from that, there's also an analyst meet scheduled today at 2:30 p.m. So we will be watching out for the commentary that comes through from the management there as well. Overall positive for Vodafone Idea. The stock is surging in trade on the back of this news flow.
Positive for the near term. Let's see how the medium to long term pans out with regards to their liquidity sort of issues, and which is why that explains a decline from the highs on the stock as well, though it's still holding with gains of almost 5% Vamakshi. But you're also looking at Fusion Microfinance down and out in today's trading session on account of fears of higher ECL provisioning.
Well, absolutely. That stock is down and out. In fact, locked in the lower circuit as we speak. And that is because the company may be required to make ECL or estimated credit loss provisioning between 500 to 550 crores in the second quarter as compared to 348 crores as seen in the first quarter. Now, this is definitely a big negative for the company. And that is because when you have higher provisioning, it also impacts the profit of the company. So a bit of a negative out there as well. But in addition to that, the company has also said that they have initiated search for a new MD and CEO, citing increased macro complexity as well as changing sectoral landscape as some of the reasons. In addition to that, they also plan to raise up to 550 crore of equity to strengthen their balance sheet. We also have a note coming in from Investec. They've in fact downgraded their rating on this counter to a sell and cut their target price to 300 per share. They say that while microfinance as a whole is witnessing a stress, but the Fusion's credit costs are way too high in their opinion, which is why they've gone ahead and downgraded their stock. So overall, given the ECL provisioning that is coming through, as well as this note from Investec, the stock is locked in the lower circuit.
Okay, all right, Vamakshi, thanks very much for that. So let's now move on. The board of HDFC Bank subsidiary HDB Financial Services has approved plans for an IPO which will include a fresh issue of around 2,500 crores. In addition to an offer for sale, we have Ritu joining in with more details on this important story.
Well, HDFC Bank subsidiary HDB Financial Services Board has approved plans for an IPO that is going to include a fresh equity issue of 2,500 crore rupees and an offer for sale by existing shareholders, and it is going to be subject to various approvals, market conditions and regulatory clearances. Now, the IPO marks a milestone because it's going to be the first company from the HDFC Group to hit the public markets in 6 years. The listing is also crucial for the company to comply with RBI guidelines because as an upper layer NBFC, HDB Financial needs to go public before September 2025 under the scale-based regulatory norms. Now, HDFC Bank holds about 94.6% stake in the company, and reports suggest that the NBFC could be valued at around 78 to 87,000 crore rupees, and that means even if HDFC Bank offloads 10% stake or so, it could raise about 7,800 to 8,700 crore rupees or more. Now, HDB is a diversified, non-deposit taking NBFC, primarily focuses on vehicle and personal loans as well as loans against property. It reported about 2,390 crores of revenues, 580 crores of profits and a total loan book of 95,600 crores as of the end of June. Now, HDFC Bank has also been exploring a stake sale in the company. It had considered suitors like Japan's Mitsubishi Group, but there's been no progress on that front so far. And now you have the company looking at a public listing.
Right, Ritu, thanks a lot for that. That's about HDB Financial Services, perhaps taking a leaf out of what took place on Bajaj Housing Finance as well. We take a short break, come back, get you more on the markets and a lot of stock-specific action on the other side. Stay tuned.
Welcome back. Well, for the markets, it's quite steady at this point in time. So we're up around 0.3%. We have the Midcap index, which is up around 0.6% at this point as well. That's basically what is the outperformance, and that's indicative in the advanced decline ratio, which is standing at around 2:1 at this point as well. So that's what's taking place in terms of the markets. But we do have Nimesh who's joining in. He's watching out for a couple of Okay, we are going to get to Nimesh in just a bit, but maybe we can just pull up Glenmark because that particular company is in focus. The stock is in focus on the back of positive news. The positive news is that the US FDA has issued a Form 483 with 0 observations to the company's Aurangabad facility. So that's the first piece of news with regards to Glenmark. The second piece of news is that Investec has written on Glenmark. They have initiated a fast long with a target price of 1,900 odd rupees. So a couple of key triggers includes that they expect the earnings momentum and importantly cash flow generation to continue, aiding their ongoing re-rating. Now, with regards to the Aurangabad facility, they've said that getting 0 observations does provide a near-term trigger. It is a critical facility. It houses multiple respiratory products, including the Flovent generic MDI, which is a type of inhaler, and other nasal sprays as well. So they see Glenmark as more of an India, rest of the world branded generics play, as both of these geographies contribute to over 70% of its EBITDA. At 23 times September 26 estimated EPS, the stock, according to them, is inexpensive. That's the reason you're seeing the stock up around 4% at this point in time. That's on Glenmark. But we do have more brokerages in focus. We have Nimesh who's joining in with his standout brokerage reports, and he's looking at Concor. Nimesh.
Hi, Ekta. So, Concor was my standout note, but now there are two brokerages who've downgraded Concor in today's market. So the first is Morgan Stanley. They have downgraded the stock to underweight now from equal weight, and they cut the target price to 774. Now, Morgan believes that the downgrade is essentially in the back of continued weakness in the EXIM volumes and the fact that there has been a sharp cut in tariff in JNPT, and JNPT contributes nearly 33% of the company's volumes, and there they are seeing the EXIM impact in terms of margins as well. On back of all this, Morgan Stanley has lowered the EPS by almost 9 to 10% for FY25 and FY27, and they've also cut the assumption on EXIM volumes by 10% versus the company's guidance of 15%. So that's the key reason why Morgan Stanley has downgraded Concor today. Even Goldman Sachs, which I put out in the morning, even they've downgraded the stock to sell now from neutral, and even Goldman has cut the target price now to 820, a potential 10% downside from current levels. Now, Goldman believes that the core earnings for Concor has been disappointing due to weak growth in the rail container segment, as well as market share, which has been seeing a bit of competition from other players as well. So quarter one was quite weak. The overall volume was at 6%, including the EXIM volume at 3% and the domestic volume at 15%, which means that for the next 9 months, company will have to do a volume growth of between 22 to 24% to meet the full year guidance, which looks very unlikely according to the Goldman note. Even in terms of valuations, the stock is now trading at close to 36 times on FY26 estimated price to earning versus the average, average at around 18 odd times. So even valuation is not comfortable, and they're seeing a bit of volume decline as well. So on back of all this, a big downgrade has come from Goldman Sachs as well. The only risk to the negative call from both these brokerages is, one, if there is a shift in terms of railway volumes post the DFC, which gets commissioned later this year, and if there is a reversal in terms of margin picking up. So these are the risk to the downside call. But both Morgan and Goldman today has downgraded the stock to an underweight or a sell rating, and they have a 10 to 15% downside from current levels in terms of target price.
That point, Nimesh, thanks a lot for that. That explains why Concor is among the top losers in the F&O space today, despite the broader markets doing extremely well at the low point today for the stock. Also, just keep an eye on the open interest jump that has happened on the futures side in Container Corp itself. It does imply that it's crossed that threshold of 95% of the market-wide position limits, and the stock may enter F&O ban. So that's about Container Corp. In fact, what we'll do is we'll talk about that and more F&O stocks in just a bit in the F&O breakdown. Take a short break, come back on the other side. We'll have Sudeep Shah, the head of technicals and derivatives research at SBI Securities. You're watching us here on Halftime Report as the record run for the market continues. Good time to look at the F&O space at midday. A bunch of stocks doing well, but importantly, the indices maintain their record run. The Nifty, hit levels of 25,925 as the highs earlier this morning, but hasn't given up much from there. Still holding, a little under 25,900 as well. The Nifty Bank doing extremely well, with the Midcaps doing a shade better with 0.6% gain. Over the last couple of trading sessions, the Midcaps have found their mojo back once again. Just keep an eye out on the India VIX, however. Typically, when the market rises, you would want the India VIX to fall. But India VIX had already fallen to levels of close to 12, 12.5 before seeing a big rally. So now there is some increase in the India VIX, and that's something we need to monitor going forward. But do we hit that coveted 26,000 mark in the very near future? Well, the 25,900 call writers believe no. Largely because there has been a fair amount of call writing at the 25,900 mark, with a premium of almost 120 rupees, telling you levels closer to 26,000, 26,020 thereabouts may entail some bit of profit taking. At the lower level though, the base is moving higher, and that's something which has been a trend all of last week as well. 25,900 put has seen some writing for a premium of closer to 150 rupees, telling you again 25,750 would be an important support. So the broad range you're looking at is 24,750 at the lower level to about 26,000 at the upper level itself. Stocks like Vodafone, Idea and Container Corp may enter F&O ban in today's trading session, after today's trading session that is. And also keep an eye out on another stock, which is RBL Bank, which may actually exit F&O ban given the unwinding of positions that we've seen out here as well. So very stock specific market, with the broader markets doing a lot better.
Okay, all right, Manglam, thanks very much for that. Sudeep Shah joins in to discuss the technicals of the market now. He's from SBI Securities. Sudeep, hi, welcome to the show. Well, the mid-caps are managing to hold up better as compared to the Nifty, but remember that the Nifty did cross 25,900 on an intraday basis, so no complaints coming in there either. What's your sense in terms of what your trade would be today?
Yeah, good afternoon. See, what's happening with the Nifty is that post that big move on Friday, we are seeing some bit of consolidation from higher levels. And despite this consolidation, markets are fairly holding on to 25,800, 25,780 zone, which now we feel this could act as an important support zone. So overall, from now on, from here on, we feel 25,750, 25,800 band on dips would offer extremely good supports, and till this is held slowly but steadily, we would cross that 26,000, 26,050 mark and keep on heading higher as the base of the put writers is shifting on the upside. So, and this is also, if you look at the bank Nifty now, if the bank Nifty post that move on Friday, today is seeing some follow-up action, and like Nifty is witnessing some kind of pressure from higher levels, bank Nifty is not witnessing that pressure. So we feel that once again, it could be this banking and the financial pack that could lead the markets from here on. And additionally, there's one more space which is looking good, and that is the real estate stocks. So we've seen a good bounce back from the real estate pack also, and that also should be on our radar for the next couple of sessions.
Right. And Sudeep, individual stocks, what do you have on your radar today?
Individual stocks, there are a couple of them now. The one stock which is there on my radar is DLF. Now, DLF post a 4 or 5 month consolidation, we are seeing a breakout on the upside. Last few sessions, the stock is slowly, the base is shifting higher, and from the current levels, we feel that the stock could do 930, 940 on the upside, and on the downside, the stop loss should be around 880. Now, another stock which I like is ICICI Prudential Insurance, ICICI Pru. Now here, there's a good base building which had happened at higher levels since August, last 1.5 months. The stock has been inching higher, but it was in a range between 720 and 770, 775 on the upside. And today we have seen a good breakout with volumes. So I feel that this stock could do well from the current levels and head up higher up to 810, 820 in the coming few weeks. And this could be bought with a stop loss of 760 on the downside.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the view coming in on the technicals of the market. Just watch out for all of these stocks: Apollo Hospitals, Bajaj Auto, Bajaj Finserv, TVS Motors, all of them sitting at fresh 52-week highs. We'll take a short break, but up next we have a very interesting chat lined up. Anu Iyengar of JP Morgan will join in to discuss key trends in the mergers and acquisition space. Stay tuned. Welcome back. Well, for the markets, it's holding steady. We've been pointing out that there are a lot of stocks which are either at the best levels that we've seen in months, which is multi-month highs, or yearly highs. So a couple of them which we did point out were from different sectors. So you can see the kind of interest which is coming through across sectors. Apollo Hospitals, Bajaj Auto, Bajaj Finserv, and TVS Motors from the broader markets also. A couple of other stocks. ONGC is showing a fantastic move today, so it's up around 3% on good amount of volumes. It's rallied around 43% this year already. State Bank of India is up around 3%, crossing that 800 rupee mark. And even M&M is doing well, crossing that 3,000 odd rupee mark. So that stock is up around 2.5%, rallied around 75% already in the first half of this year. But nonetheless, let's talk about AMI Organics now. It's surged in trade as GM Financial has initiated coverage on the stock. Sonal is here to tell us more on it. Sonal.
Well, the stock has already rallied around 30% this month, and there's some additional pop that we're seeing on the stock today. JM Financial has initiated coverage on the stock. They call the company leading player in pharmaceutical intermediates and specialty chemical industry. So they are in both the segments. They have a buy rating with a target price of 1,965 rupees a share. They're expecting revenue CAGR of around 31%, EBITDA CAGR of 44%, and profit CAGR of around 76% over FY24 to FY27. A number of reasons why they like the stock. The first one is that the company has started supplying multiple intermediates for Nubeqa, which is a prostate cancer drug, as a part of the contract with Fermion. The contract with Fermion is a big one, and the street was watching out for this one. And JM Financial expects peak potential in terms of revenues to be between 500 to 700 crore rupees. That is a big addition to their top line. The second one would be they have set up 2,000 tons production capacity for each of the two electrolytes which are used for additives for lithium-ion batteries, and this is something which could add around 150 crore in terms of revenues by FY27 for the company itself. So that's the additional kicker. Third, they say that there are multiple process patents with validity of around 10 plus years now, and this is something which will help the company maintain their market share. So the capex plans that the company has, the market share gains that the company has been seeing is something that JM Financial likes, and that's why they're quite bullish on this name.
Well, they're quite bullish on this name, and the name's done well, up 5% in today's trading session as well. But meanwhile, just keep an eye on a couple of other stocks as well, which are gaining traction once again, and it belongs to the PSU bank space. Bank of Baroda, for instance, is now up around 4%. Remember, the stock has seen a bit of a correction from the highs. It's down about 20% from the highs, but over the last couple of trading sessions, we've seen some of these PSUs, etc., come back in fashion. Petronet LNG is the other one. Union Bank doing fairly well as well, and a lot of the shipbuilders too, which had seen a big correction from the top, have now seen some bit of a comeback as well. So pull up something like a Cochin Shipyard, still holding up in the green, and we have Mazagon Dock as well, which is marginally in the red right now, though had seen a decent rally on Friday. Come back, and as promised, we'll have Anu Iyengar of JP Morgan discussing the key trends in the M&A space on the other side. Well, the market continues to do well and continues to hold on for the Midcaps index along with the frontline indices at near record levels as well. So good time to get in, a deep dive into the M&A landscape in the country. Surabhi Upadhyay, a colleague, is, speaking with Anu Iyengar, who is the Global Head of Advisory and M&A from the JP Morgan India Investor Summit sidelines, the venue itself. Surabhi, M&A is what everyone's talking about, right? So much paper coming in, so much supply, and everyone's just looking at raising these funds to buy other people. I mean, it's all happening.
Oh, absolutely. Manglam, you said it. I mean, Deal Street is buzzing in India like never before, I can say. And who else but the big boss lady from Wall Street to give us her view on the way things are shaping up here in India. And of course, trends around the world. I have with me Anu Iyengar, who's the Global Head of Advisory at M&A at JP Morgan. Anu, pleasure to be here with you in person, and thank you for making time. And that's really the big question. I'll actually start with the India question, because we're seeing such hectic activity, maybe less on the M&A side, but a lot in the secondary market on the equity side. How do you find India? How's your day one at the conference, and what's the feeling?
Yeah, very excited to be here and very excited to be back here after a year. And the mood continues to be better. Last year when I was here, I thought it was pretty robust. And if possible, this year it's even more buoyant than it was last year. And as you correctly say, the activity in the equity capital markets here have been extremely high. So the previous high water mark was in 2021. And this year, already, there has been more issuances than the full year of 21. And so we're very optimistic, not just about this year, and but also the next year, and our pipeline is the best that it has ever been. And there's a lot of drivers for this, right? Because when you step back and look, the combination of what is happening domestically in India, as well as several multinational companies wanting an acquisition currency in India. So they're using this enhances their ability for future optionality. As well as where there is a depth and richness of capital markets. This is now an over 5 trillion valued equity capital market.
Yeah.
And the growth that you've seen has also been tremendous. Even in the M&A market, the previous decade was at about a $70 billion average. This decade has been a $140 billion average.
Yeah.
And that trend, as you have more companies investing in India, more companies with an acquisition currency in India, we really see kind of 4 different tracks of activity.
Okay.
One is kind of India for India, which is driving a lot of consumption. Then there is Make in India, so the exports part of it.
Right.
Then the tremendous investment in infrastructure, particularly digital infrastructure.
Yes.
As well as the fourth piece is all these currencies that are getting created, as well as domestic activity. Because earlier when we were selling a business, you were really looking at either the financial sponsor community, which is extremely active in India, and tremendous amount of money coming into India from sponsors. Is when you look at all of Asia, the 2 areas that financial sponsors are putting money into is India and Japan. In addition to that, for the first time, we also see when we are selling an asset, we have a domestic Indian company as a buyer for these assets. Because everybody is looking at the valuation and saying, I can afford to pay 20 times or 25 times because I myself trade at 30 times or north of it.
You know, I'm so glad you brought up that issue because that's, where we wanted to sort of learn from your vantage point. Valuations in the listed market, in the unlisted market over here. And as these deals happen, whether it's M&A or, the secondary equity sales, one is always going to be wondering whether this indicates this is a peak. And you've seen enough boom and bust cycles, right? Whether when so-called smart insiders start selling, whether it's private equity or promoters or early sponsors, when they start selling, is it reason to be cautious or is it just sign of a maturing market?
Yeah, I think it is a sign also of what is the underlying fundamentals, because valuation is related to that, right? So what is driving that valuation is as important as where the valuation is. So if it is based on the earnings of the company, it's also based on the domestic amount of capital through SIPs that is going into the equity market. So when you look at the inflows are actually pretty high.
Yes.
But then you look at the percentage of domestic household income that is going into equities. It's still a very small percentage compared to most of the kind of rich countries or, Western world or whatever you want to call it. As a percentage of how much money goes into the equity market.
Right.
So as long as the fundamentals continue to be strong, and as long as you have areas like this, the manufacturing growth continues to be there, digital infrastructure continues to grow, then the fundamentals support the valuation.
Okay.
So the way that...
so you're not sounding too concerned about how companies are quoting at or how, the valuations at which deals are happening here in India?
No.
Okay.
Because currently it is supported by fundamentals.
Okay.
And so I think that's what we keep watching to say, does the underlying fundamentals support the valuation?
Sure.
And then the impact of it is, like I said, in 3 different categories. Emboldening domestic companies. Because when you feel confident about your own stock price, you act with confidence. Enabling financial sponsors, because their whole way the financial sponsor trade happens is you buy something and you have to have a view on how do I exit.
Sure.
When you look at the equity markets and your ability to exit, it gives you confidence to invest. And then the third element is the multinational companies creating a currency by taking their Indian business and listing it.
Fair point. And now let's add the global backdrop to all of this, because we speak when the rate cutting cycle is finally kicked off in the US. There's also politics. So just let's start with what lower rates are in general going to mean for the overall global M&A landscape and for emerging markets like India or Asia. What do you see ahead?
So I think the expectation of the Fed rate cut was fairly well telegraphed and the market had built that into it. there is further expectation as well, which also the market has built in. So that's generally healthy because that means you feel better about inflation, and that's what makes the Fed confident to do that. So the cost of doing deals becomes lower, which should enable more deal activity in theory, right?
Sure.
So financing was always available, but the cost of that financing has gone a little bit better.
Yeah.
And when you look particularly at the overall global M&A market, strategic activity is back to 90% of historical averages.
Okay.
Sponsor activity, which is much more influenced by the interest rates, is at 60% of historical levels. So all the pent-up activity from the sponsor side, if that comes back online in 25 and 26, that should prove very valuable. That's not been the case here in India, but more globally, sponsor activity has been more limited.
So now we have to cover two more interesting subjects.
Sure.
One is obviously AI and this
Yes.
huge disruption that's playing out across the world. What do you think it will mean in terms of deal activity or issuances for not just the world but markets like India?
So I am very excited about the possibilities of AI, both as a personal user as well as the possibilities it has for our business and the possibilities it has for our clients. So this morning we had a wonderful presentation by the Union Minister on everything that is happening in India and the outlook kind of for the next 10 years, the 2030 plan. And so AI, I think, has a pretty big role to play, because if you are going to manufacture more and have exports that is being forecasted, this could be a game changer. Right now, the number one topic that boards in global companies are talking about is the impact that AI is going to have on their own businesses. We ourselves are testing several LLM suites, about 400 different ones in our investment banking business, to try and see how it is that we can use that. Because the data is vast. The organization of the data is very limited. So if you can organize the data and draw conclusions from it, that can be powerful.
Sure.
In terms of providing insights.
So the other hot subject that we must get your view on is obviously U.S. elections, right?
Yes.
So while the debates will continue and the estimates will keep swinging, what impact? I mean, will it dramatically have any meaningful impact, irrespective of the outcome, whether it's Republican or Democrat?
So usually
for markets and in general,
so usually in election year, there is not dramatically reduced or increased activity. There are, idiosyncrasies when there is an expectation of some tax change one way or the other. But the overall M&A volumes in an election year is kind of in line with other years, right? So there's not a material change. Places where you could have change, or the biggest debated areas, are antitrust. Because the antitrust and regulatory framework and the unpredictability of it has been one of the impediments to deal making.
Okay.
And so that is an open question in terms of, is it going to be the same? Is it going to be different?
Sure.
And it's not even whether it's restrictive or expansionary. It's just, can you predict it?
Sure.
Right? Do you have a good sense of it?
Got it. So last question, and we only have 30 seconds left on the conversation, but if I were to ask you to take a crystal ball and look forward into the next 12 to 15 months, talk about secondary market activity or M&A, deals in general, in Asia and in India in particular, what would you say would be the hottest sectors?
So I view in Asia as India to be the brightest spot within Asia, and Japan to be the other kind of country. And so we are very heavily invested and rooting for it. And sectors-wise, I'd say digital infrastructure, energy transition, as well as multinational companies monetizing.
All right, we'll watch it for those trends. Thank you very much for joining in and giving us perspective on all of these issues. Thanks very much. On that note, we need to take a very quick break. Back in just a moment.
Welcome back. Well, for the markets, it's steady, so up around 0.7% currently for the mid-cap index. Just want to point out that a couple of stocks are seeing a bit of pressure. So Godrej Godfrey Phillips is down around 2.5% at this point in time. We have a couple of others such as Concor, and Nimesh did mention those brokerage reports. That stock is down around 1% Narayana Health is also seeing some amount of profit taking, so down around 1% currently. But overall, the entire breadth of the market is favoring the advances. So there are over 1,600 stocks advancing and around 800 stocks which are declining on the National Stock Exchange. So it currently stands at around 2:1, very healthy in terms of an advance decline ratio, which is sustaining, as you can see, at this point in time. But let's now go across to Manisha, our commodities editor, for our commodity update on the show.
Thank you so much for that, Ekta. And joining us on the show now is Vikram Dhawan. He's Fund Manager, Commodities at Nippon India Mutual Funds. Vikram, hi, and what an exciting time to be in gold and silver. And I'll start with gold first. And we've seen ETF buying kind of pick up, not just in India, but the global markets as well. But more than that, congratulations, because you feature in the top 10 when it comes to gold ETFs. One, how does that feel? And two, how are the numbers looking?
Thank you very much, Manisha, for inviting me on your show. And thank you very much for your wishes. And I think I would also like to congratulate you that because of your efforts and the efforts of the channel and the kind of content you have, the Indian investors have been able to ride the entire bull cycle of both gold and silver, which puts them in a very enviable and a unique position, because not all across the world, investors have been able to ride the entire bull cycle. And as we have seen, that while the ETF flows are picking up, but if you see post-COVID, the ETF AUMs are still down by about 30%. So I think, it's kudos to the Indian investors, and we are extremely grateful and extremely fortunate to be part of this story.
Oh, yes. And Vikram, would you say that, especially with the sovereign gold bonds kind of out of the market, the ETFs really got all those investors coming in too?
So I think, to be honest, Manisha, even when the sovereign gold bonds were in full swing, we did have decent flows into ETFs, because one of the reasons why people invest in gold is because of liquidity. And that is one attribute which attracts the central banks also to gold. And ETF is perhaps the most liquid form of gold going around, even compared to physical gold, and definitely a lot more liquid than SGBs. I'm glad that the SGB story is fading, not because of the flows that may come into ETF, but because of the SGB, the whole bullion market was distorted, because it led to a lot of wrong type of expectation from the investors. I mean, instead of investing into gold for the diversification and the liquidity, etc., I think the investor expectations were more on the tax benefit and the coupon, etc. So I think this is a very good plus for the overall bullion market, into which we are also one of the stakeholders.
So Vikram, as the market stands right now, what really has been the trend for this financial year until now? What is the kind of net inflows have we seen? What is the AUM that you're managing for gold and silver as well?
So I think the flows have been very decent this year across the industry, and they are picking up across the world. I mean, just to give you an example, that the flows this year in the gold ETFs in India are almost 3 to 4x of what we saw last financial year. And I think this will only accelerate, primarily because of the awareness and also the portfolio diversification story. The multi-asset story is picking up in India. And as I've always maintained that as the size of the portfolios increase, the diversification is very important, and gold ticks all the boxes as far as the diversification or hedging of the portfolio is concerned. And amongst all of this, the most liquid form of gold is gold ETFs. So I think it's a story which is just picking up. But again, having said that, if you look at the entire gold market in India, which is roughly about 3 to 4 lakh crores, the flows into ETFs are still very paltry, about 3 to 4% of the entire market. So I think we can only go higher from here.
And what about silver? Because that really seems to be picking up as well, and more participants joining in. What is the AUM there, and how have you seen that one grow?
So I think silver, it has got a very important utility, because silver is a lot more bulkier than gold. So we are seeing that the traditional physical buyers or investors of silver are shifting into ETFs. And that has just begun because roughly about 15 to 20% of silver which is consumed in India is for investment purposes. So I think that silver story will pick up even further. And as we have seen, the ramp up in the AUM in silver has been a lot faster than gold because of this reason.
Well, absolutely. The way the markets have started to buy into gold and silver, Vikram, more gold rather, and the way the prices have been making all-time highs, are any redemptions that you're looking at? Or do you think, or have you seen people buying even at these current levels?
So I think if you look at the gold story as of now, this is a very unique bull market for both gold and silver, where the investment flows and the speculative flows have either been flat or negative. So this is a bull run in both silver and gold, which is a lot more resilient than the past ones, which is being appreciated by the market. Obviously, when you talk about gold, central banks are the elephant in the room. And even this year also, they have been buying large quantities since 2022. 22-23 were the years where they bought roughly about 2 to 2.5x of what they usually buy. And we have seen same run rate being maintained by the central banks this year also. And if you talk about silver, the story which stands out for silver is green tech, and the fundamentals of silver, the demand supply gap is fairly tight, and it is the 4th year in deficit. So I think there is this long-term, story of gold. And one thing I like to tell your viewers is that the central bank holding of U.S. Treasuries 25 years back was about 75 to 80% of their total portfolio, which is now gone down to below 60%. Now, you may argue it's a very glacial trend, but if this trend was to continue for another decade or so, then the US dollar holding will actually be a minority holding in portfolios of most central banks. So we are definitely moving towards, notwithstanding what is happening on geopolitics or the other, economics and everything, but I think we may be moving towards a world which looks a lot different than what it was 20, 30 years back. And I think when you are moving into uncertain times, gold is one of the few, assets that you want to have in your portfolio. So I think you may see a quarter of volatility, redemption going, but I think the long-term story of gold and silver is intact. And I think we expect the flows, not only in India, but across the world, to continue over the longer period of time.
Well, that's exactly what the markets believe as well, is the reason that we haven't seen any big correction or decline in gold prices. Every small dip has seen more buying and more all-time highs. Vikram Dhawan, always a pleasure talking to you. Thank you so much for joining us. So clearly the global map and the global financial map also seems to be changing, and gold really seems to be finding a strong space within that. But with that, that's all the time on the show. After a short break, we'll come back with Business Lunch that will take all the action forward.